Okay, welcome to another exciting video. Well, I'm excited about this one because there's a lot of good information here that I want to share with you. One is that one of my mortgages came up for early renewal. So what that means is that within 120 days of when your mortgage term comes up for renewal, you have the option to renew early. Okay, and the great thing about renewing early is that if the rates are better, you renew early and you get to take advantage of the newer rate. Okay, so that was like, wow, okay, fantastic. I get to take advantage of the newer rate. Now, of course, if the rate isn't better, then it makes sense not to renew early and to keep going with the current term that you have until the very last point or the last date. But then also keep in mind that you want to go rate shopping at that point. Okay, so now in my situation, I didn't do any rate shopping because I really did get a really good rate with the bank that I'm at. Okay, and the other great thing about this early renewal is that this is the first renewal that I've had in the first term, and the first term that I had was for 5 years. So when I started talking to the bank about renewing, they said, "Oh yeah, we'll renew early for you because it's within the 120 days." So it early renewal is within that 120 days. So any 120 days before your maturity date. Okay. So the bank person said, "Oh, we can renew it for you at this rate." And it was already a good rate. And I said, "Look, can you knock it down even by 0.01%? They came back and knocked it down by 0.2%. Okay. And you might think, okay, that's not a big deal, but let me show you some numbers to show you why this is a good deal. Okay. And then I'm also going to show you why the numbers actually, so when I thought, okay, I'm going to get a lower rate, my monthly payments, my weekly payments are going to be less. It turned out that it wasn't. Okay. And I'm going to show you why that is the case. Okay. And then the other thing I want to show you is just to be careful about when you renew how the calculations are done. And so then that's why my payments weren't any lower. But there's a benefit to that. Okay. And I'm going to share with you what that benefit is. Okay. So I'm going to switch over and I'm going to show you what is going on here. Okay. So this is the Scotiabank mortgage calculator online. And I love this particular app from Scotiabank over the other banks just because it's so easy to use. Okay. So I'm going to use some actual numbers here on the condo that I have. And so the mortgage amount that's coming up for renewal, so this is how much I still owe on my mortgage at the end of my 5-year term. So in 120 days or so, this is how much I'm still going to owe them. And this number you can get from your mortgage statements or from calling in to your bank. Okay. So I'm going to have 150,000 owing on my mortgage. So normally when you take out a mortgage, it's amortized over 25 years. I like to do accelerated weekly. Okay. And Scotia doesn't really distinguish between accelerated weekly and regular weekly. Okay. So I normally just go with weekly. And here's the rate that they got me, 2.79. And for somebody like me, I'm super happy with this rate because one, they came down by 0.2%. And the second reason that I'm super happy with this, besides the fact that it was lower than my current mortgage rate, is that being self-employed, it's hard to get a really good rate with an A bank. Okay. And so when they, without having to requalify and submit a full application. Okay. So I'm not going to go and open up that can of worms. Okay. And if you don't know what I'm talking about in terms of being self-employed and the difficulties of getting a mortgage, then feel free to reach out to me and I will share with you the heartache that I experience around this. Okay, so once you put in the interest rate, Scotiabank will automatically calculate your weekly payment, because I chose weekly here, and it will actually tell me how long it will take me to pay that off. Okay. So I was sort of expecting, my monthly payments to go down. So right now I'm paying about $280. So I was expecting it to go down to about $175. Well, instead of it coming down to $175, it was about $295. And I thought, wow, that's weird. Why is it actually more money? So this is when I pulled this up and I went over here Sorry about that. I had a bit of technical glitch there. Okay, so once I found out that, wait a minute, why is my weekly payments actually $10 more? I'm like, what happened there? So I pulled up the Scotia mortgage calculator. So let me show you what they did. So rather than calculating it over 25 years, okay, okay. So rather than calculating it over 25 years, when I was online and I got this number, the 150 that I was still going to owe them, they actually said that my amortization was over 11 years and 6 months. So look at that. So as soon as I make that change, right, it came to $320 weekly, right? So where the difference is, I'm not exactly sure why, oh, not monthly here, sorry. So this is fairly close, from 320 to my 295, right? So what they ended up doing was taking my 150 and saying, okay, we're going to amortize it over 11 years now, and so your monthly payments are now $295. Okay, so the great thing about this, the benefit of them sort of forcing this $300 price tag on me, is to say, is to say, hey, you know what? You can pay off your mortgage faster than 25 years, which is fantastic, because that's what I try to do with all of my properties, to be able to leverage them. So when you are up for renewal, keep in mind that they're not going to take the amount that you owe and spread it over another 25 years. They're going to just give you whatever time's left over and spread it over that. So your monthly payments or your weekly payments will probably still be the same, if not just a little bit more, even though the interest rate has gone down. Okay, so happy house hunting, everybody. Good luck.